Hi, my name is Angus Ho with Daddy Debt, a part of the Ash Management Group. I want to show how you can budget as a full-time engineer, make real estate investments, and live an exceptional family life as a dad. So come along with me in this journey of wealth. Welcome back, YouTube. Today I want to talk about one of the most debated topics over investing styles, that is the real estate market versus the stock market. So today I want to take a whack at it and give you my opinion. Just letting you know, it is an engineer's perspective. So I had to put in all that hard work in learning the real estate industry and the stock market. For me, there are no gimmicks to sell you because I'm an engineer, so I am not going to pick a side and give you a very neutral view. When it comes to math, who do you even trust more with your math? A stockbroker, a realtor, or an engineer? Just letting you know, I got an A in calculus. Most people say that one is better than the other because they either failed at doing the other, they never even tried the other, or they're trying to promote themselves. Well, just let you know, I've been pretty successful at both, being a real estate investor and investing in stocks. Today, I'll give you a fair analysis of the pros and cons between the stock market and the real estate market. Since both is so risky, make sure you find the right help by either joining the Daddy Debt Facebook group or subscribing to this channel so that you can find the right help and support that you need. Smash that like button if you haven't done so yet. Make sure you also comment below some of the issues you ran into either as a real estate investor or a stockbroker. Let me or someone else help you figure out the problems you're having. Well, let's dive right into it. Stockbroker versus real estate investor, pros and cons. Well, I want to start off with the pros and cons of the stock market. Each person is different, so choosing the stock market over the real estate investor might not be the right thing for you. My suggestion, however, is that you don't think too hard about it and get started. Just remember, the first thing to do is to learn a little, then do a little, then learn a little bit more, then do a little bit more. And that is how you become successful. For the stock market, the barrier of entry is very small. You can get started with as little as $100 with apps like Robinhood and 212. Fractional trading these days has become so popular that you can just buy half a share of Amazon for $1,000. Or you can buy a tenth of a share for $200. For stocks, your ability to enter and leave the stock market is as simple as a click. You hit that sell button and you're out. In the stock market, there is always someone ready to buy the price that you want to sell it at. With the stock market, depending on what you choose, like the S&P 500 index funds, you put your money in it, you set it, and you forget it. There is nothing more to do it than that. So from that perspective, the stock market does have a little bit less time commitment. You can look at the portfolio once a month if you wanted to, every 6 months, every year, and even longer, but I highly don't suggest you don't look at your portfolio less than once a year. The stock market also has many sectors that you can invest in, including real estate, but you can also invest in things like science, technology, minerals, gold, oil and gas, the banks and financials, and even emerging markets like marijuana. If cryptocurrency is your thing, you got it. The stock market also has its drawbacks, like it can be very volatile, like in times of crisis. It is very easy to get emotional over the stock market, and once you get emotional, you'll think about it all day long. Then, because you're not sleeping well, stress sets in, and then your family might get affected. Disaster! Now, let's move on to real estate, the pros and cons of it. Real estate can be a very hands-on job, but you have full control over how much hands-on you want to be. You can be that landlord that fixes everything, that property manages everything, and you can also be that landlord that doesn't do anything and contract all the maintenance work and all the property management to a firm. You can also be that landlord of someone in between, a little bit here and a little bit there. The world is your oyster. Real estate also gives you many tax advantages like the 1031 tax exchange and first-time homebuyers plan. The house can be used as a collateral to help you finance a car or renovations to your home. One of the drawbacks of real estate investing is that it is time intensive. Even if you outsource it to a property manager, you will spend time debating whether or not you want to pay for the repairs or not. When there is a problem, you will have to spend time driving to the property, driving to the hardware store, researching on how to fix it, fixing the problem. Even if you contract out the work, you'll have to debate whether or not this is a fair price. Do you want to spend money on it? It is exhausting decision making. Real estate has a very high barrier to entry. For a $400,000 house and a 5% down, you will still need $10,000 to get started. Make sure you watch that video on how I got started as a real estate investor at the age of 25 by using the ASH method. Getting out of the real estate industry is not that easy, as you have to first list the house, then do showings until there is a suitable buyer. With the 40-day average days on the market, it will take some time. Even if a suitable buyer is found, they can give you conditions like a 90-day closing, so you won't even be receiving your money for another 90 days. So that's all of the pros and cons between real estate investing and stock brokering. What do you think of the pros and cons so far? Do you like real estate investing more or stock market more? Make sure you comment below what you think. If something is stopping you from starting, make sure you also tell me below and let me or someone else help you get started. Any question, even if you have a landlord issue or a stockbroker issue, make sure you comment below. Also, make sure you hit that subscribe button so you know when new videos show up when I answer your questions. Alright, let's get on to the numbers. For the stock market, I use the benchmark of the S&P 500 to do the comparisons. This is one of the safest index funds to compare with, and it is the most likely return that you'll ever receive. Trust me, when you first start at the stock market, you are not going to make more than 10%. After about 5 years of doing it, then do you start making better gains. Let's just use the S&P 500 index as the benchmark to your investment growth. The S&P 500 index performs at around 7% after inflation. The average rate of return of the S&P 500 index is around 7% after inflation in the last 10 years and gives you a 2% dividend yield. So if you were to invest $100,000 into the stock market, in 10 years your investment would be worth around $170,000 and you would get around $22,000 in dividends. So in 10 years, your stock portfolio should be worth around $190,000 and a return of 9.2%. Let's move on to the real estate. How much are you going to get in return? Let's just say that you invest $100,000 and you make a 20% down payment. You would be able to purchase a house of $500,000. Then you would need a mortgage of $400,000, and today's rate is going at 2.82%. This makes your monthly mortgage payment around $1,856 per month. Then let's say you rent the upstairs for $1,300 and the downstairs for $900. You include 5% for maintenance and repairs and 8% for vacancy. You'll have to pay $200 per month on property tax and about $100 for property insurance. If you're a property manager like me, I also pay $10 for bookkeeping. Your net income would be $2,200 and your net expenses would be around $2,500. Let's also consider your equity that you will be receiving over the next 10 years. I will also include a 3% appreciation rate. So in 10 years, you would have $225,000 in equity. So if you were to invest $100,000 in real estate, you would have approximately $194,000, which is approximately a 9.4% return. As you can see, in terms of each of the benefits, each investing style has its pros and cons. It is really up to you as to what you want to pursue first. Knowing them both now, both of them makes me really happy. Just letting you know, There is nothing like a get quick rich scheme. But if there's one thing that you should do today, it is get started now. How I do things nowadays is diversify in the stock market and in the real estate industry. In the previous video, remember ASH. A is accumulate, S is to save, and H, buy the house. So for me, how I accumulate is get a job. I am an engineer. How I save is invest it in the stock market. How I buy a house is I find the property and buy it. Say it 10 times in your head. Accumulate, save, house. Accumulate, save, house. And that is your road to success. Well, good luck. And don't forget, ASH. If you like to hear more budgeting, engineering, or real estate tips, please leave a comment for what you want to hear. Smash that like button, subscribe button, and be sure to hit that notification bell so you'll be the first to know when I post new videos every week on Sundays. From the ASH Management Group, this is Daddy Dad saving you money.